All right, welcome everyone. Excited to kick things off. If any of you guys have questions along the way, please feel free to use the Q&A function within Zoom, and we'll be answering questions both along the way and leaving plenty of time at the end for additional Q&A. I'll give you a little overview of the agenda for today's presentation. So we're going to start off by going over the VU platform, which is going to cover VU Venture Partners, our venture capital fund, VU Capital Partners, our private equity fund, Bonded, which is our investor syndicate and investor network. Venture University, we'll go over the program in pretty good detail, which is our VCP Investor Accelerator. And then lastly, we'll go over Finally, which is a brand new fund admin platform that we just launched. And then we'll end with an Ask Me Anything session where we'll open up about any questions at all that people have about VU or broadly about anything in the venture capital private equity industry. Happy to address any kind of questions and thoughts, no matter how crazy or fun those questions are. So I always enjoy the Ask Me Anything sessions to be able to address and to brainstorm even sometimes about the venture private equity asset class. So that's going to be the agenda for today's presentation. So high level, so VU has now built a pretty strong horizontal platform across our venture fund and private equity fund and our investor syndicate. On the venture fund side, we have 9 verticals. So we have the 2 generalist verticals on consumer and enterprise, where if all we did were to cover those 2 verticals, we pretty much cover everything because you're either selling to a consumer or an enterprise. But we also have more sub-vertical teams across fintech for financial services, the food industry, the frontier industry, frontier being things like advanced AI, advanced robotics, advanced materials, and space technology. We have the healthcare team, which is focusing on digital health, as well as medical devices, biotechnology, and pharma. We have the prop tech investment team, which looks at residential and commercial real estate technology, as well as construction technology. We have a pretty good focus within the transportation space and logistics. And most recently, we've now added the Web3 team. The Web3 team is being led by a woman named Rox. She is an amazing individual who's now, she's at Meta itself, leading up with the Oculus and Metaverse team. And so it's been amazing having her lead the Web3 team that we now have at VU. So we have the 9 verticals that we're typically looking at within the venture capital space. On the private equity side, we just launched our private equity fund. Really covers 4 core sectors across real estate, growth equity, leverage buyouts, and pre-IPO. We're also in the process of raising our first private equity fund, which will be about 70% focusing on real estate, and about 30% will be on growth equity and leverage buyouts for the most part. The first fund that we're going to be doing for private equity is going to be a cloud infrastructure focused fund. We'll be doing real estate for cloud infrastructure, and some of the buyouts that we're going to do are going to be within the cloud infrastructure space. And then we'll also do a number of individual transactions within real estate. So we actually have our first real estate deal that we're doing next week, which is a multifamily unit in Boston. And we'll probably start doing about anywhere from 2 to 4 core real estate investments outside of the cloud infrastructure fund, but just on a deal by deal basis in real estate. Bonded is our investor syndicate. So people can join Bonded and invest on a deal by deal basis. Or you can invest in committed funds. So you can invest in our committed venture capital fund. We're raising our fund 2 right now for our venture fund. If you want to get access to a broad portfolio, you can just invest in the fund or invest on a deal by deal basis. Same thing on the private equity side. You can invest in the private equity fund or you can do individual deals. So a lot of flexibility there. If you had interest in also being in a verticalized fund, let's say you only want to do healthcare deals or you only want to do Web3 deals, you can also invest in each of them as a fund. So let's say you want to put in $50,000 into the Frontier Fund. That would get deployed across 10 companies at $5,000 each that are Frontier related. So you can both do individual deals, kind of large overall spectrum of deals, or you can even do verticalized fund structure with Bonded. And then we have Venture University, which I'm going to go into a lot of detail during this presentation, which has a mixture of both an academic program as well as an investment apprenticeship program, and that you can do for 3 to 12 months. And the more time you do it, effectively, the more investment experience you get, where you can invest in anywhere from, call it 5 to 30 investments over the course of 3 to 12 months. So you really build a solid track record for yourself by doing kind of those 5 to 30 investments. And then lastly, we have our Finally fund admin platform for individuals that are looking at creating and managing SPVs and fund entities. And that covers everything from accounting, tax, K1s. You get your own white labeled investor portal and also get dedicated fund admin support. We've created a platform that we believe to be best in class at a very competitive rate. So it's more competitive in pricing than using AngelList or Assure or Carta or allocations.com. And not only is it at a good price, but you're also getting something that has significantly more bells and whistles and features and support. So we do think we've kind of developed now what we believe is to be a best in class fund admin platform for the entire industry. So super excited that we've now announced that. And we already have about 17 fund managers in the process of being onboarded for that. So truly a good horizontal platform across the entire VU platform, across everything that has to do with venture capital and private equity. Little background on ourselves. I'm Sky. I'm the founder of VU. I've been doing venture capital now for roughly 15 years, pretty much my entire life after college. Ranked as a Powerlist 100 VC. Previously, my first venture was for about 6 years at my first venture fund. I went on to then be the founder and GP of a venture fund called Simon Venture Group, which is the investment arm of a company called Simon Property Group, which is an S&P 100 company. They are the largest REIT, and they're the largest public retail real estate company in the world. So I founded and ran that fund for a number of years, investing in retail brands, real estate tech. And then I was fortunate, after leaving that, went on to create my next fund with the former CEO of McDonald's, a guy named Don Thompson. That was called Cleveland Avenue. Don was president CEO of McDonald's for about 5 years, and he was at McDonald's for a total of 25 years. That was, again, food and beverage focused fund. And during that time is when I kind of brainstormed the concept for what we were going to create at VU as a total platform. We've been building that out now for the last 5 years, and every year it gets more exciting for what we're building at VU. Andrew was my first hire, my first partner to join VU. Andrew's been doing venture capital for about 25 years. The majority of his venture career was at RRE Ventures, one of the top performing and largest VC funds on the East Coast. Andrew's also ranked as one of the most loved VCs and top social influencer. And then my partner James has been doing venture for a little over a decade. Originally was a venture partner at Kochla Ventures, then at SoftBank's China Fund, well before the Vision Fund was created. And then the core of his venture experience was really created at Formation 8, now called 8VC. And for those of you who are familiar with 8VC, also one of the top performing VC funds in the world. They early on, he co-founded that with a guy named Joe Lonsdale and another guy named Gideon. Gideon is the former CFO of Facebook and the former CFO of YouTube. Joe Lonsdale internally at Formation 8 ended up then incubating companies like Palantir and Wish, but have been an amazing, amazing track record. So across the three of us, we have about 45 plus years of venture experience, over 250 investments. I've personally done now over 140 investments. I'm probably closer to 150 now. And internally, we've deployed about 1.8 billion, and we have over a 4x net realized return. And for those that are familiar with how returns are, most people in venture capital, especially those that have been doing it that long, they usually like to give their return multiple as a MOIC, which is a combination of an unrealized and a realized number. Very few venture partners actually have a positive net realized, actual returns. So it means cash on cash returns. So we've returned over 4x on that 1.8 billion over that time. So very rare to find fund managers that have achieved that. And in large respect, that's tied to the fact that the three of us have also been some of the earliest and largest investors in over 20 unicorns. My partner Andrew, for example, was in the Series A round of Facebook. There's a very short list of investors on the cap table of Facebook that were in the Series A. Also, Andrew was early on in Twitter. In Uber, for example, he came in at roughly $1 billion at Uber and exited at 40 billion, so made about a 40x. With Venmo, Andrew was the first $250,000 check in Venmo, which PayPal then acquired for about $700-800 million. Internally, as I mentioned at Formation 8, James previously was in the seed round of Oculus, which Facebook acquired about 2 years later for $2 billion. And they incubated companies like Palantir and Wish. Wish just recently went public, I guess about 7 months ago or so, at about 20 billion. And then other companies like Oscar Health, that's worth about, depending on where we are in the market cycle, between 2 and 4 billion. And then on my side, I've been doing a lot of the consumer investing, as well as the more frontier deals. So companies like Beyond Meat, if you guys are familiar with the alternative plant-based meat company Beyond Meat, I was one of the earliest investors, and I was the largest dollar investor in the company before it went public. So I had the most capital before the IPO happened, and I served on the board for a number of years. Beyond Meat, for example, returned more than 2 times my entire fund within 3 years of launching the fund. So that turned out well. And then other companies like FabFitFun, where I was the earliest investor in their seed round. And FabFitFun is scaled to be well worth over much more than $1 billion now, initially coming in at like a $24 million valuation. So again, a large track record certainly of success within venture, and even within our current VU portfolio just over the last few years. We're now approaching roughly about 5% of our portfolio are becoming unicorns, and depending on how 2023 pans out, we may end up approaching actually about 7% and maybe even 10% of our current VU portfolio that have become unicorns, which is truly unprecedented given that we're investing at the seed Series A stage. 2 of the companies I list here, Wayflyer and Flyer. Wayflyer is now worth about 1.6 billion and Flyer about 1.4 billion since we initially invested at the much earlier stages. So VU Venture Partners as a venture fund, we are a highly scaled global venture fund. To give you kind of from perspective on that, we have an investment team that's about 10 times larger than a typical investment team. So we have roughly 70 investors globally. I'm here in our San Francisco office. We previously had a New York office that we shut down during COVID, but we still have people in New York. And we also have a Hong Kong office. And now we're also looking at expanding into having an office in Europe, Africa, as well as the Middle East and Latin America. So we're in the process of also identifying new office locations that we'll be looking to open up. That scale, already at about 70 investors, will probably grow, by the way, our team to probably about 100 investors over the next 12-ish months to 18 months. But that certainly puts us as one of the largest, if not the largest, seed Series A investment team in the world. And that allows us to then source and evaluate about 10 times more deal flow. So we're evaluating about 20,000 deals a year, which is about 5,000 a quarter. We also think that we're in unprecedented territory. We're not aware of any other venture fund that's sourcing that many deals. The closest that we probably get is Plug and Play, which is the largest startup accelerator in the world. But if that's our main comp, then we're in good company. Most venture funds only look at about 2,000 deals a year. And while every VC likes to brag about only investing in 1% of the deals that they look at, they'll look at 2,000, they'll invest in 20. We also are hyper selective. So we're only picking about 20 new portfolio companies a year, but looking at 10 times more deal flow. So our selectivity is about 10 times more selective, given that we're just looking at way more, but we're still only doing 20 core investments every year on the venture side. As I mentioned, we have our offices here in San Francisco and Hong Kong. but we're also throughout the United States. We have people across LA, Chicago, Boston, Austin, Miami. In Asia, while we have our Hong Kong office, we also have a large number of our team members in Singapore and in India, as well as throughout overall Southeast Asia. We have people in Indonesia, Korea, Japan, and also our core number of people on the team in Europe really focuses around London and Germany, though we do have people throughout Europe as well. We just opened up the new San Francisco office, so if any of you guys are in the San Francisco area and want to come visit, we have a beautiful office here right near Pier 39, where the ferry is, and the seals that are frequently barking. And you can also check out a tour of our San Francisco office as well as our Hong Kong office on Venture University's website if you want to take a quick video tour of the office. Some quick stats on our first venture fund. So Fund 1 is roughly 100 million. We're deploying roughly about 10 million a year. That's likely to be growing significantly now that we created our investor syndicate platform, Bonded. We've invested now in about 75 portfolio companies. We've been averaging for the last 4 or 5 years now, roughly 20 deals a year and about 10 follow-on rounds. So we're very much supportive of putting additional capital into the companies after we invest. So we're looking not to just do one round, but multiple rounds of funding to support the portfolio companies, hopefully from seed Series A all the way up through IPO. Our average check size is about $200,000 to $1 million, plus there's the additional follow-on capital. And then stage-wise, while we're oftentimes investing in pre-seed to Series B, we really are stage agnostic. Pretty much anywhere that we can get kind of a 10x to 100x return, that's usually the ballpark that we're looking for every deal. And in fact, if we look at the average return profile of our portfolio, it's about a 16x to a 38x per deal. And that's not including the outliers in the portfolio, which we probably have about, 15 to 25% range of our portfolio is probably over 100x potential returns. So if we take those out, we're kind of in the core average at around 16 to 38x per deal. And Fund 1 is performing extremely well. So over the last 5 years, if we look at Fund 1's performance, we're right now directionally looking like Fund 1 could end up being a 3x to a 10x fund. And that's with about roughly 10% or a little less than 10% success of Fund 1's portfolio. So we're doing really, really well on Fund 1. And just to kind of really highlight the magnitude of how well Fund 1 is doing, if you look at the top decile venture funds, which is our same vintage of 2018, PitchBook and Preqin have 68, 70% IRR for your top decile, which is like your top 5% or so of funds. We are at a 72% IRR for our 2021 IRR, which puts us in the 97th percentile overall of funds. So we're outperforming even what is top decile. So truly is really a status in and of our own in the quality of the deals that we're getting into with the strategy that we've built. On all the verticals, we have 9 core verticals, as I mentioned. Every one of these verticals, we've developed a core investment thesis around. So given the number of people we have on the team, we go deep. So like we're about to do this week, we're making an investment in a metaverse infrastructure platform. It's the category leader in developing infrastructure for metaverses. That company we had probably met with now anywhere from 10 to 15 of the core platforms that exist to narrow in on really the category leader. And we do that with every category. So like we're an investor in a lab-grown food company called Finless Foods, which is lab-growing fish muscle. We've now met with probably 40, 50 companies in the lab growing of muscle across species and other aspects of that overall industry. And Finless Foods, by far is going after the largest market by all mussels that humans eat. It is by far the largest mussel that humans eat. Interesting enough is tuna. I thought it would have been chicken or pig, but tuna is actually globally the biggest mussel. So again, we go really deep with every deal that we do, get a good sense of every single player basically in the space, and then make our call. And we're really co-investing alongside the top venture funds. And in many cases, some of the top venture funds are now also doing deals because we've kind of narrowed down to the ones that we're going to do. Funds like Founders Fund, Sequoia, and Andreessen have most recently, for example, with Founders Fund, one of the deals that we did, they even told us that the reason they were doing the deal is because we had kind of selected that as all the other, compared to all the other companies, and we have a much bigger team and analysis than they've even done. For geography-wise, our portfolio is about, while it's a global portfolio, it's about 2/3 in the United States and about 1/3 outside of the United States. Right now, Asia is about 10%, but it will likely be growing to about 15%, maybe even 20% of our overall portfolio companies. Some of the best deals that we've been seeing have been in Asia. We also just made our first 2 investments in Africa, and we're definitely going to be making more there. Both of the 2 deals that we did in Africa are truly rocket ship companies. Both of them are likely unicorns within the next 12 months. And then we also started investing in Latin America. I think we have maybe at 5 core portfolio companies in Latin America as well. From a overall ecosystem perspective, it was interesting. We looked on LinkedIn of where we were in followers, and we have about 23,000 followers, which is, you might think 23,000 is a lot or a little, but it was fascinating when you actually compared it to, top other tier funds like Benchmark, we're the same exact number of followers as Benchmark. We have more than Greycroft, more than Canaan, even Andrew's prior fund, RE Ventures, or James's fund, 8VC. We're about 2 to 3 times the number of followers they have. And we've also built a much larger community that we've begun inviting to events that we're hosting, and that's now grown to about 85,000 people across our community, and growing pretty rapidly. We'll likely cross well over 100,000 by probably middle of next year. And then with our private equity fund, we just launched the website, vucapitalpartners.com. Again, I'm not going to spend too much time on the private equity side on this one right now, but as we start making more investments in private equity versus venture capital, we also are looking at launching a private equity investor accelerator similar to Venture University on the venture side, but it'll be Venture University effectively for private equity for individuals that want to just do real estate transactions or just want to do leverage buyout transactions. We will, once we get a handful of deals closed and we have a kind of a consistent deal closing process, we will then likely launch an investor accelerator specifically more on the private equity side versus Venture University right now is much more on the venture side. And then Bonded, we just launched the website. We just started marketing it. We have roughly 2,500 accredited investors on the platform. And what's unique about it is that you get to decide what the specific things that you want to receive in deals. So whether you want to invest in just in venture deals, just in private equity deals, maybe you just want to look at healthcare deals, or maybe you just want to look at deals in Africa or just in Middle East. So you get to decide your interests, and you'll only receive deals based on those interests. There's no membership fee. The minimum investment is $5,000 per deal. And then you'll also be invited to our investor calls, where our investment team will present the opportunities that we're going to be investing in. You get to see the due diligence that we did and have Q&A. And the only deals that are shared are the deals that we're actually investing our own money into. So we'll never just be sharing deal flow that we think is interesting. Every deal we share are deals that we're actually putting our own funds money into as well. So it's super, super highly curated. We're doing right now basically about a deal a week to every other week. So you can definitely, if you're looking at it from a generalist perspective, you'll definitely see active deal flow on a weekly or every other week basis. And then if you're more narrowed in your interest, you'll see deals on a less frequent basis. So get into now Venture University. So Venture University is the world's leading investor accelerator for venture capital, private equity, and angel investing. We really created the entire category. The category of an investor accelerator never existed before us. While there certainly have been some copycats that have launched along the way, we have maintained as we're the Y Combinator for VC. So the program that is definitely the most sought after, the most challenging to get into, and the one that has the biggest value for people to do it hands down, is Venture University. It really builds on the evolution of the venture ecosystem. You had the rise of venture funds, you had the rise of accelerators. It made sense that you would eventually have the rise of an investor accelerator category. And it's one that has been really, really important for building the future of the venture capital and private equity asset class. So Venture University has two core parts. It has our academic curriculum, which is inclusive of three core parts. It has our VCPE Masterclass, which is a 1 week program. It's about 250 slides, about 25 plus hours of content. And then we have the advanced modules, which there are about 20 core advanced modules on things like how to operate a board of directors, doing financial modeling, cap tables, return analysis, how to create a fund, M&A and IPO. Many of them are taught by our team, but we also have others that are taught by world-renowned industry experts. So Wilson Sonsini, which is often seen as like the top number one, number two VC law firm in the world, they partnered with us to teach the M&A and IPO modules. We have other people like top well-known LPs that teach how to pitch an LP. A guy named Chris Duvos, who originally was an anchor LP for about 40 top funds like First Round Capital, if you guys are familiar with First Round. But Chris used to run Princeton's endowment, and then he managed Yale's endowment. So he's definitely one of the most sought after LPs that funds like to pitch. And so having his wisdom for what LPs look for as really a core anchor LP for some of the top emerging fund managers has been fantastic. And then lastly, we have the weekly fireside chat. So we've now done, I think we've crossed over 200 VCPE fireside chats now. So most of the who's who in venture, we've now done fireside chats with, from anywhere from Founders Fund to Andreessen Horowitz to Khosla, Lightspeed. All these people are certainly in our network, but we have now the fireside chats that you can join and ask questions to those investors, as well as we have access to all of the recorded content. So you can take the academic curriculum either live, or you can also take it and just do it on demand and watch the recorded content. But again, we got 200 plus fireside chats with a whole bunch of great VCs. And private equity funds, angel investors, a lot of great founders in there too. And then on the VCPE investor apprenticeship side is the other core part of the investor accelerator. So joining our program is very unique because it's 25% is academics. 75% of our program is getting really high quality investment experience over 3 to 12 months. Where you will be making anywhere from 5 to 30 investments, depending on how long you're doing the program for. And everybody also gets a profit sharing agreement. Great about the profit sharing agreement is it has the ability to be worth either some, all, or more than the entire cost of the program. Great example, we in cohort 8, we invested in a company called Bear Flag Robotics, which is an autonomous driving tractor company. Within 14 months of our seed investment, John Deere, the big tractor company, bought Bear Flags for $250 million. We invested at a $27 million valuation. So within 14 months, we made a 9x return on that. And we were able to send back a third of all of the tuition to everyone in cohort 8, which was pretty awesome. And they still have all the other portfolio companies that they did in cohort 8 as well, which are also looking really strong. And so again, very different from if you were to do an MBA program, which would just be academics, cost way more, take way more time, and Harvard Business School and Stanford Business School don't send you back part of your tuition afterwards. What they do though is they do follow up with occasional requests to send them even more money above and beyond their tuition. We will never do that. So the idea that you actually have a profit sharing agreement in the upside for the efforts that you have during the program is really, really novel and a great upside for doing the program. Who are the right people for doing Venture University? It's a pretty broad spectrum. You have people certainly that want to join venture capital and private equity funds where they want to join as an analyst, associate, principal, or partner. You have individuals that are looking to launch their own fund as emerging fund managers. That's roughly about 25% of every cohort are people looking to launch their own fund. Those that are just angel investors and family offices would be looking at just professionalizing themselves in their direct investment strategy, or they might want to become LPs in other funds, and they're looking at kind of getting smarter about how to do that. Let's see, Udesh has a question. Would VU consider opening up offices in Sydney, Australia? And if so, can we have exploratory discussions, as I believe there are synergies with the project that I'm working on here in Sydney? Yeah, we would love to talk about opening up an office in Sydney. We do have some of our investors in Sydney, and also some of our best portfolio companies are actually in Australia. It's part of obviously our Asia investment portfolio, but certainly would love to do that. Let's see. Pete says, I recently just finished a program at Columbia Business School for leveraged buyouts. If I have a deal, how to have VU Capital Partners take a look at it? Is there a co-GP option with you? Yeah, correct. So if you have a leveraged buyout deal that you want to share with us, just email me, Pete, and can certainly talk about having our private equity. We have a separate team now for our private equity fund, for the Diversity Venture Fund, and can certainly have our private equity team look at it. And we can certainly do a structure where there's some economic sharing as part of that. So totally can do that. Other people that are doing the program are people that are part of a corporate venture fund, a startup accelerator. They want to launch their own startup studio. We have a large number of people that are also industry experts. Maybe they were at, for example, we have Rox, who currently works at Meta on their Oculus team and their Metaverse team. She's now on our team helping to lead our Web3 team. She could in the future go on and launch her own Metaverse focused fund, or just stay at VU for the rest of her life. And so again, a lot of great opportunities for people that have true industry expertise. In many cases, like in healthcare, some of those people even have PhDs and really know the categories that they're in. Others, I would say, are really kind of entrepreneurs and founders. Maybe you sold your company recently and now you're looking to do your next thing, and you're not sure if you're going to create your next thing or you want to find another rocket ship to join. You can maybe join one of VU's portfolio companies. We have a handful of rocket ships in the portfolio that you could join and work with them to scale. Or maybe you end up wanting to launch your own fund after the liquidity event that you had from selling your company. And then lastly, for undergraduates and graduate students, it's certainly not the largest portion of our portfolio, of our cohort. Every cohort is maybe about 5% people that are undergrad and graduate. So the vast majority are people that are out of college. And we try to keep the spectrum between mid-20s to like mid-50s. And people really in their 20s, 30s, 40s, and 50s represent the core people that are part of every cohort. Let's see, question from Tajira. Currently in the process of applying to graduate school, is there a cost-effective version of the accelerator separately? If you earned your Series 7 through a firm and it lapsed 2 years, you still join the bond. So yeah, you can certainly you can join bonded just by being an accredited investor. So if you're an accredited investor by doing the Series 7, then you can just join bonded and you can make investments through that. Certainly, if you're applying to graduate school, you can also do Venture University either part-time or full-time. And I would certainly consider Venture University for doing it for anywhere from 3 to 12 months as a good alternative to doing a graduate school program. As you'll see, it's a lot less expensive, a lot less time, and you have a much higher success rate in breaking into venture capital and private equity. I'll show you, go into the stats. We have about 2/3 of the people that graduate that get a venture capital private equity job within 12 months. You don't have a 2/3 probability if you graduate even from Harvard Business School or Stanford Business School and getting into venture and private equity. So certainly an option that you can do it either part-time or full-time, depending on what your final decision is there. So go over a little the details about the program itself. So again, we do 4 cohorts a year. So each quarter is essentially a different cohort. So if you're with us for a whole year, it basically just goes all the way through with a few little breaks here and there, but pretty consistent. The program, again, can be designed as both a part-time program as well as a full-time program. Part-time really being about roughly 20 hours. And I'll kind of show how we get to the 20 hours down below here, but very much works with both type of schedules. Every quarter is designed into about 11 weeks, and Technically, every quarter has about 12 weeks, so you kind of almost have like a week break of vacation in between every cohort. But week one starts off with a live VCPE masterclass. Goes from Monday through Friday, 9 to 5, as well as you could also take it from an on-demand perspective and watch the content on your own schedule. And you can do that live. You can either do it in person here at the San Francisco office or at the Hong Kong office, or you can also join virtually from anywhere during the masterclass week. Second week is what we call Startup Madness. We have 60 plus startup pitches that we schedule from all the top accelerators, other deal flow that we're receiving, but you kind of jump into the deep end of the pool really quickly with a large number of companies pitching you. And then week 3 through 10, each person will then be joining one of our deal sourcing teams. So you'll join like the consumer team, you'll join the fintech team, you get to pick the vertical that you want to be part of, and you'll start doing your own sourcing, due diligence along the way. Tuesdays and Thursdays on week 3 through 10 will be our advanced modules. We also have our fireside chats on Tuesday and Thursday at around lunchtime. And we have the investment apprenticeship. Really the core schedule there is that on Mondays, we have our partners meeting, which is about 3 to 4 hours every Monday. Every deal team will basically pitch 1 to 2 deals per deal team during the partners meeting. And you guys get to decide what the deals are that are going to be pitched. So it's also, you guys are very much more of a senior play than if you were an intern or a fellow. You're really in a much more power position to decide what deals are brought to the partners meeting. You also get to decide what deals are brought to the investment committee. And those will be done on an ad hoc basis. We have management meetings per vertical team on Wednesdays for 1 hour each. And then each team also meets with its own on Fridays. So like the consumer team will meet for an hour and talk about their top deals of the week. And then they'll decide which are going to be the 1 or 2 deals that they'll bring up at the partners meeting the following week. Then we end week 11 with Reverse Demo Day. Reverse Demo Day is when our investment team then presents the companies that we're going to be investing in for the quarter to a decent sized audience. We may start doing that in person again. We used to do it in person, both in New York and in San Francisco prior to COVID. So we may start doing it in person again. Usually we have a few hundred people that show up. We then do a Napa Valley trip where we go to some great vineyards, great bonding with the current cohort. We then do an alumni networking event every quarter. And this is a nice long tail value of doing VU. Every quarter, we're doing an alumni event. So 4 times a year, you can engage with alumni, with the current cohort that's graduating, and it builds this long tail value where it builds out a bigger network within the venture industry, leads to a number of jobs that have been gotten, with jobs that weren't even being publicly posted, were being shared internally and had new hires that came out of that. Also accessing other deal flow. Having the long tail of doing a quarterly alumni event has been really important and exciting. And then we also end with a VCP recruiting very actively every quarter. We have venture funds and private equity funds that reach out to us and say, hey, I'm hiring for this position or these positions. We then do a matching between all of our alumni and our current cohort, and we curate about 3 to 6 people for every venture fund and private equity fund. And they know they're getting someone that's already been curated, because we have a 1% acceptance rate. So you're getting a really high quality person that's now been trained in venture capital, has a track record in venture capital, and all that is together why we have such a high success rate in what people do after VU. Can weeks 2 through 10 also be done virtually? Yeah, great question, Carl. Yes, 100% of the program can be done virtually. We modified that obviously during COVID, and we haven't changed that. So you can effectively do the entire program virtually, though it is highly recommended. I would do the first week or 2 weeks in person in San Francisco if you can, not a requirement. And then I would also fly back for the last week. So week 11, we do a whole bunch of really fun activities like the Napa trip, and we do the alumni event. And so I would typically say at a minimum, if you wanted to come to San Francisco, I would say masterclass week and the last week, and then do the middle virtually. But the whole thing can technically be done virtually as well as in person. As part of the Investor Accelerator program, you will be joining our investment team. So you'll be joining as an analyst, associate, principal, or venture partner during those 3 to 12 months. You get to select the vertical team that you want to focus on. you'll get the benefit of being able to choose what deals are brought to the partners meeting, what deals are brought to the investment committee. And during the course of every quarter, we'll do about 2 to 7 investments, which we've been very consistent for the last 5 years. So you have a highly probabilistic outcome that you, by the end of 3 months, you will have 2 to 7 portfolio companies that are really, really high quality, investing alongside other top tier VCs that are just killer opportunities. And if you're with us for a year, you'll do up to 30 investments. The profit sharing agreement, as also is then joining our overall VU alumni. We now have over 500 VU alumni, which is growing to a little over 1,000 people over the next 3 years. Some people have started calling us the VCP mafia, in that we have a large growing number of people that are inside of venture funds and private equity funds. So just like you have with like Harvard and Stanford, where people are hiring other people who went to similar business schools, we're also getting that to happen. We have a lot of VU alumni that are launching funds or at other funds, and they're also hiring VU alumni over anybody else. And it's because you know the quality and you know what you're getting, and you know the network that they're part of, that there's a big benefit to having someone who's graduated from VU. That person is a significantly more valuable asset to a fund than a typical person that may get hired at a fund. So the more people you could probably have on your team from VU, you're definitely going to have some advantages as a fund. As I mentioned, about 64% of the people have graduated have gotten venture capital private equity jobs within 12 months. And within the next 3 years, will be about 1,000 alumni within VU. While you're with us and even after with us, we continue to support you in your career development. So during the program, we do a session where we customize a career plan for every person. So depending if you want to launch your own fund or become a partner at a fund or an analyst or associate at a fund, generalist fund, vertical fund, we'll work with you on a strategy to give you the best shot of actually having that happen. We'll update your resume. We'll work on updating the resume with you as well as LinkedIn. You'll get mentorship from both the VU executive team as well as VU alumni. You can use it as an opportunity to build your brand, right? You're going to build a track record of investments. You can use the opportunity to do some blog articles, social media. You'll be seen as an active investor now within venture capital. You can even speak at events. And then, as I mentioned, every quarter we do this VC PE job matching play with all the funds. Typically, we have around 20 to 30 core venture funds that are recruiting every quarter from VU and consistently doing that matching process. And then if you have any interviews at venture funds or private equity funds, we will then do an interview prep with you and also do some case studies with you to make sure that you really knock it out of the park. And then we can also be a job reference for you as well. So when people are asking for references, you now have a job reference specifically for someone within the venture capital private equity industry. On the academic side, again, you can take it entirely both not only in person and virtually, but you can also take the on-demand version of it as well. So we have the entire recorded course that you can take. We have a private YouTube platform that we have that one can do that. It's inclusive of also a live Q&A session on Wednesdays. So the on-demand watching curriculum, it's not completely void of actually an in-person attention. So on Wednesdays, you can ask any question you want. And there's a group of other people that are also taking the course on an on-demand basis. So there's at least a real-time Q&A function where you can ask questions along the way as you're learning the material. Every quarter, we select about 50 individuals to join VU, about 30 to 40 across the US and Europe, and about 10 to 15 in Asia. And again, we've accepted about 1% of the people that apply. So we've had over 50,000 applications over the last 5 years, and we've graduated about 550 people. From a profile of who are the people that do VU, again, about every quarter are people in their 20s, 30s, 40s, and 50s. So very much age diversified. About 50% are those in the analyst, associate, principal category. 25% are angel investors, family offices. 25% are new fund managers. And we have a big focus on diversity. About 30% of every cohort are women, which is about 2 times the industry average. And also Black and Hispanic for underrepresented minorities, we're about 10 times the industry average, about 23-24% that we have for both Black and Hispanic. So really, really moving the needle in a very meaningful way for what the face looks like of people that do venture capital and private equity. Then we have our Finally platform. We just launched this again about 6 months ago. Initially, we built it just as a fund admin platform for ourselves, and then we started realizing that this was actually pretty disruptive with what we built, and shared it with a lot of our VU alumni, and we quickly got already to 17 fund managers that are being onboarded into the platform, and a really good wait list of people now that want to use it. It literally covers everything you need for fund admin. And we provide the fund documents, we provide the legal entity creation. You have the white labeled investor portal, so it's your own branded investor portal, and you get dedicated admin support. If you are a fund manager and you want to see pricing, if you go to finallyfundadmin.com, you will see that we have 2 calculators, both for SPVs and funds. So you can just enter in what you're thinking about in terms of number of investors or size of capital, and you'll get a pretty close quote to what it'll cost for creating and managing SPVs as well as funds. So, and you'll see also that it's hyper competitive on pricing compared to really anything else in the market, but it also is a lot more inclusive and designed to have a lot more customer success, both for fund managers and your investors, which is why we really created Finally, because we were so frustrated with our own fund admin experience. And we tried 2 different fund admins. 2 of the biggest ones were the ones that we've used in the past. And we were so frustrated that we said, why can't there be one that doesn't have all these problems? And so we decided to build it ourselves. And so the name Finally comes from the idea that finally, investment docs will get signed on time, and finally wires will get sent on time, and finally K1 and taxes, K1s, will get done on time. And so that's where the name for Finally came from. On the pricing side for the program, if for in-person, it is $20,000 per person for the first quarter, and $15,000 for virtual. If you're interested in doing more than 1 quarter, the pricing then goes down. So you can see as we go to a second session, a third session, a fourth session. If you do it for a whole year, you're looking at about $40,000 for in-person and about $30,000 for virtual. So again, if you were to compare that to doing an MBA program, a 2-year MBA program is going to cost you about $160,000 to $200,000. So significantly less within either half the time or significantly less time, with a much, much higher probability of success of what you do afterwards, and being part of a family of an alumni that are hyper focused on being in the venture capital private equity industry. And for those that are just interested in the academic side, for either the VCP masterclass or the advanced modules, you can do the live academic programs for $5,000 each, or you can do the on-demand program for $2,500 or $1,500 for undergrads and MBA students. I mentioned Bear Flags, which is in the top right there, but we've had, again, from what the portfolio has been building up of, the cohorts have been amazing at finding some really, really incredible opportunities, which are significantly up now on a MOIC basis. And directionally, we think all of these companies still have another 10x up, except for Bear Flags, because it was a liquidity event. So we had the 9x liquidity event with Bear Flags in 14 months. But all the other companies, we think there's still the potential for another 10x up. So companies like Fintor, it's a 13x right now. We think it could be up to be 130x. Companies like Orbit Fab that are 6x, we think could be up to like a 60x. And so still some pretty significant upsides, but already showing really good signs of momentum within the portfolio. How is the program uniquely different from other options, which is a common question that gets asked? The first is that you get to build an actual track record, right? Rather than just taking an academic program, you get to build a legitimate investment track record doing really quality deals, because we know what our IRR is at 72%. So we know that we're going to be doing some of the best performing deals in venture. You get to learn alongside people that have also been doing venture capital for 45 years and have real success in doing the asset class. So not only building a track record, but learning alongside people that truly know what they're doing. The other benefit is that you have the much better, you have an alumni base that can be a long tail value for what you're doing, that really does keep printing money forever into the future of how that relationship network of the alumni is. But if you think of some of the other options out there, you got fellowships, you got scout programs, you have interning. They're very, for the most part, they're very, very unstructured programs. The one that people often have heard of is Kauffman Fellows. Kauffman is for people that are already in the venture capital industry. So the people that do Kauffman Fellows are already principals or partners of venture funds. So a lot of the people that graduate from VU that go on to work in venture could then go on to be a Kauffman Fellow afterwards. But Kauffman is not focused on creating the opportunities of bringing people into the industry. The program itself is also about $80,000. So it's $40,000 for 2 years for Kauffman. And it's really, if you look at their curriculum, it's pretty much entirely a leadership development program. It is not an academic focus on teaching about venture capital or private equity. It's really leadership focused. And again, for people that are already working at a venture capital fund. Scout programs are really, there's a whole spectrum of scout programs, very, very unstructured for the most part. You're basically a free investment banker where you're sourcing deals for a fund and you just send them over. And if the partner likes them, they'll do a meeting. But you're basically, when you're meeting with founders as a scout, you're basically telling the scout, like, I'm not a VC, but I know a VC where if I like it, I'll share the deal with them. That's basically what you are as a scout. But it's very unstructured, not a lot of dedicated time that you get out of doing that. So it's a nice thing to show on your resume or add LinkedIn, like that you're a scout at Sequoia, but how much real experience did you actually get? It's pretty minimal. And then interning, extremely different from interning. At VU, you're never going to do any busy work. So you're only going to be doing the things that matter. And you get to decide what deals are brought to the partner meetings. You get to decide what deals are brought to the investment committee. You would never get to do that as an intern or a scout or a fellowship, to have that type of responsibility at a much more senior level. That's what you're provided at VU, and it also builds a lot more legitimate work experience. A big reason of why our people also get jobs, well in excess of people that even went to top MBA programs, is other people are applying to venture jobs saying they want to do venture capital or private equity, but they've never actually done it. And if you do an MBA program, you're basically praying that you're going to get a job for the summer in venture capital and private equity. You're not guaranteed a job for the summer. Hopefully you'll get one, but you might not. At VU, you're guaranteed the quality work experience, and you're going to actually be having a track record of success at the end of every quarter. So again, very, very different on that side in the value prop. And while from a pricing perspective, VU is certainly not the most expensive option. You have, once you get into venture and you want to do Kauffman, that's $80,000. But it certainly is the highest quality in terms of the academic curriculum that we've built, the community that we have. It is certainly the largest alumni network of any program, given that we really were the creators of the entire category. Let's see, Udesh said, if we commence with a 3-month program, can we upgrade to the 12-month as we complete? Correct, yeah, so Udesh, great question. So 100%, so at the midpoint, let's say you join the program for the winter cohort, at the midpoint, like February, beginning of March, we follow up with everybody in the cohort and says, hey, who's interested in doing the second cohort, so we can reserve those spots. And then you can decide if you want to do for a whole year. So you can 100% join for the 3-month program and then decide that you want to roll it into either 2 to 4 quarters afterwards. So yeah, can totally do that. And we ask that question at the mid part of every quarter to make sure that we're reserving spots for people in the current cohort. Again, we have the dates coming up. So our next cohort will be in January for both the US and Europe cohort as well as the Asia cohort. And then after that in March, June, and October for when the next one start on the US side. So with that, I will open it up for additional questions, as well as the Ask Me Anything session for any questions that you guys have about literally anything across venture capital, private equity, and anything else. So open it up for additional questions. Or anything about Venture University. I know I was very thorough, so I take it as a compliment if nobody has any specific questions. But I'll wait a little bit longer, another 2 minutes to see if people have any questions to ask. Question coming. For the cost of the course, is it expected to also invest $5,000 per deal? No. Great question. There's no requirement that you invest anything personally during the program. So the cost of the program is all the cost that you'll have. You'll get the profit sharing agreement as part of it, and there's no requirement to invest in any deals. By the way, something I didn't actually bring up. If you are an accredited investor and you do the program, if you want to invest in any of the deals that we're doing on a deal-by-deal basis, there's no management fee and there's no carry on any of the deals that you do. So while there's no obligation or requirement to personally invest, if you did choose to do it, there's zero management fee, zero carry on your capital while you do it. So there really is just the cost of the program, and that gets you your profit sharing agreement. You'll do anywhere from 2 to 7 deals during the quarter, and no additional capital is needed, though you could optionally invest into any of the deals for no management fee, no carry. So that's a nice perk that you get for it. Let's see. We have Stanley says for any incoming at current venture funds, is there a chance to loop in the fund for co-investment alongside View? Correct. Yeah. So we have a number of venture funds that we do quarterly deal flow calls with. So if you are at a current fund, happy to talk to you about doing a quarterly deal flow call. And then we can share some of the top deals that we're doing and vice versa and see about co-investing together. So Stanley, if you want to email me or Jenna, my email is I'll put it in the chat here. If anybody wants to follow up, you can email me and I can certainly coordinate with, also put Arpin is the guy who manages the quarterly deal flow calls. So you can email Arpin, and if you do want to email Jenna afterwards, I'll put the other email in. Jenna is our head of admissions, so you can also talk to Jenna about the admissions process if you have questions. But on the quarterly deal flow call, you can include me and Arpin. Udesha asks, is there a slowdown due to the current economic crisis, and will this last 2 to 3 years? Yeah, great question. So yeah, I think what we've seen so far in 2022 is there definitely was a pullback in terms of capital being deployed by angel investors and family offices. On the venture side, there was certainly a doubling down on the winners within portfolios, and you didn't have as much capital deployed overall. So I think people were, given the capital markets went down, many funds were a lot more nice about doing capital calls, so they reduced their capital calls, knowing that having to sell your public equity stakes to fund capital calls to put money into the venture fund is not great. So there has been some sensitivity about the size of capital calls and being more sensitive to that. So will this last for the next 2 to 3 years? I think 2013, depending on how things go. If there's no other big surprises, no other shocks to the system. I think 2023 will be on a good road, kind of back to normalcy. Venture as an asset class in general, has gone through obviously many cycles, and we're always focusing on investing in needs and not wants to be able to make sure that we survive through all great economies. And myself, Andrew, and James, we've invested through multiple economic cycles and have had success in investing in all economic cycles. So some of the worst times in economic history have obviously been some of the best times for investing in venture, and founders that would have never created their company unless they lost their job. Like all the people that just lost their job at Meta, so many great new founders were just created. Like they just got pushed off their lofty jobs working at Meta, and they're like, okay, now they're actually going to create those startups that they've thought about, but they never had enough conviction to maybe do, but now they don't have a job. And so I would absolutely love funding some of those people that are really quality people, but didn't have the conviction yet, unless they were forced to leave their big tech company. Serena asks, how much time per week would I expect to spend to do the project? So part-time, I would say about 20 hours. That's between the 3-hour to 4-hour partner meeting. You're going to have a 1-hour management meeting on Wednesdays. A 1-hour vertical team meeting is on Fridays. So that gets you to call it 6 hours. And then you're going to have the advanced modules on Tuesdays and Thursdays for about 2 hours each. So that's another 4 hours. So it's about 6 + 4, so about 10 hours. And then the other 10 hours are basically you focusing on using your time however you want to focus on deal sourcing, due diligence, investment committees, things like that. So 20 hours is definitely sufficient given the schedule that we've created, where you'll be part of all the core things from the partner meetings, the management meetings, investment committees, the academic modules. You'll have time for all of that. And you can also, everything's always recorded too. So if you ever miss anything, you can also watch it on and really catch up on one or two things that you miss. And then is there anything addition to the cost of the course? Nope, there's nothing additional cost of the course. It is just what it is. What's the difference between Fund 1 and Fund 2? Fund 1 is our investor syndicate. So that's now been branded as Bonded. So the Bonded platform is our Fund 1 investor syndicate, which is now about 2,500 investors that are accredited investors. Fund 2 is our first committed fund, which has committed LPs. It's a 10-year fund. It'll invest in about 60 portfolio companies over the next 3 years. So we did the first closing of Fund 2 earlier this year. We're going to do a final close for Fund 2 next year. And so it's our first committed fund. And it has the big difference is it has follow-on capital built into the strategy because it's a committed fund. And so it'll have, again, 60 companies, roughly 20 deals a year. So it'll be invested in all the deals that we're effectively doing throughout the year for the next 3 years, or now the next roughly 2 years. And then it'll have the follow-on capital. So that's the main difference, really, investor syndicate versus committed fund. Very impressive update. Can you please help us understand the interview process? Yeah, so best thing would be to reach out to Jenna to schedule an interview, and then she can ask her standard interview questions as she does. By the way, she did about 700, her and her team, the admissions team, did about 700 interviews over about 6 months. We just did the calculation, and that narrowed it down to the roughly the 70-ish people that were in the two different cohorts, about 35 people in both the last two cohorts. And so they're used to doing the interviews and looking for really truly extraordinary individuals that'll be very value add in their capability in sourcing deals, their capability in doing due diligence. So being an expert in something can be helpful but not required. But really, how do you leverage your background to really outperform as being on one of the investment teams, whether it's like the fintech team, the consumer team, the healthcare team. So really, what do you bring to the table why do you think you're going to make a great VC? Is assuming that you could be layered in with the academics and actually being part of an investment team. What can you bring to the table to really outperform to having a chance to be part of the investment team? Dominic says, how do you transition from one cohort to the next? Is there a team responsible for maintaining point of contact with speaking to a cohort member? Yeah, actually, one thing that we're developing now is we're moving towards a lead for every team. So historically, we haven't had team leads, but we're evolving into team leads. It may be a combination of our VU alumni that become team leads that are actively working with that particular team every quarter. And we're actually going to go through the process of identifying one or more leads per team coming up in December with our alumni base. But we'll probably have one or two team leads is one play. As we also continue to scale, we also may hire people full time to have like a principal partner for the healthcare team, a principal partner for the fintech team. Right now, that has not been the case. Really, it's been myself, Andrew, Akash, Arpan, Faraz, some of the other people that have been kind of the core contacts from cohort to cohort. It has not been a really big issue overall, but it's something that I think we could certainly grow and also create unique opportunities for the alumni to continue engagement even after the program. How does the above impact deal flow? No impact. We have a lot of, like, one thing that's great about alumni is our alumni are so successful at joining other venture funds or launching funds. The alumni then also start sending us lots of great deals. Like a good portion of our deal flow, it's a growing percent of our deal flow that actually is coming from our alumni and really quality deals too. And so no impact certainly on the deal, but just keeps on getting bigger. I think we can probably grow to be, if right now we're at 20,000 a year, I think we can probably push about 25, 30,000 over the next 18 months. Can you clarify the part-time option 20 hours a week. Is there really is this really a viable option? Yeah, 100%. We have pretty much every cohort, about 50% of every cohort are part-time. That 20 hours a week is basically broken out to the partners meeting on Mondays for 3 to 4 hours, the management meeting for an hour, your internal team meeting for an hour. So that stuff will be about, call it 5, 6 hours. You then have the advanced modules, the academics, on Tuesdays and Thursdays for about 2 hours each. That's another 4 hours. So that gets you to about 10 hours total. And then the other 10 hours to get to 20 hours, the other 10 hours are really on your own schedule. So focusing on deal sourcing, due diligence, investment committees, all that. So yeah, the schedule has been pretty well refined, that a 20-hour schedule is more than enough to make sure you're getting core value for it. Obviously, the more time you put in, the more you're going to get out of it, but it definitely works well with a 20 hours a week based on that schedule. If you join virtually, it appears all the times are Pacific. Correct. Yeah, all the times are in Pacific, or in our Asia team on Hong Kong time. But yeah, for the U.S. program is all on Pacific time. Barry asks, can VU work with deals presented by companies, people outside of VU, or people who don't get selected by VU? Yeah, you can always submit deal flows. So on VU Venture Partners website, you can submit deals, and our investment team is constantly evaluating the deals that people submit to us. So we have a lot of incoming deal flow through that. So if you do have deals that you want us to look at, we can certainly evaluate any investment opportunities. Carl says, I'm very, very interested. I soon will be finishing Columbia, the VCP Executive Edge program, but love the hands-on angle of VU. I do have a family, though, and wonder how flexible the program is for parents who pick up their kids from school. So I'd like the immersive aspect, but also the flexibility. Correct. It's your own schedule. There's no requirement of any of this. If there's a partners meeting that you can't join, or you can't join for all of it, it's on your own schedule. So do as much as you can. Everything's pretty much recorded, so you can also go back and watch anything. So it's designed. We have a lot of the average age is between 25 to 55. So a lot of those people have children. You're not the only one with children. So it is designed very much for that flexibility in mind, and it is easily achievable. And let's see. We have the amount you haven't invested yet with Fund 1. Is that for new investments or for follow-on? So Fund 1 is a syndicate. And so we're deploying about around 10 million a year. It was closer to 12 million a year pre this financial. So we weren't impacted that much. We were doing about 12 million a year. We're now doing about 10 million a year. And I know that'll likely go up dramatically now that we're actively marketing bonded for growing the syndicate. So we've gotten to 2,500 investors, by the way, without ever marketing before. So now that we're going to be marketing the syndicate, that will grow significantly. But it's a syndicate, so there is no committed fund for Fund 1. For Fund 2, we've this year we'll have selected our first 20 deals, and so for the next 2 years we have another 40 companies to select for the next 2 years, plus follow-on capital. Fund 2 is roughly about 50% reserved for follow-on capital, and 50% for the initial investments. On ambition to become a GP for a micro PE fund, impact fund for non-accredited investors, it sounds like VU can get there. Yep, correct. This would definitely be helpful for you if you're looking at doing a micro PE impact fund. We definitely have had a lot of impact investors in the program. Every deal we do, by the way, is going after some of the largest market opportunities that exist, and some of the best ways to get some of the biggest impact is by doing that. So we have lab growing organs, we have lab growing muscle to eat, we have male contraceptive, we have a male birth control company, a lot of great things that are certainly positive on the impact side. Is the cost the same whether we are full-time or part-time? No, the part-time program is 15,000. Sorry, I'll go back to the pricing sheet just so you can see it. So it's 20,000 for in person and 15,000 for virtual. And go back to here. Actually, keep this up. Serena asks, if we join part-time, can the partner meetings can be done after work time? The partner meetings are between 9:30 and about noon on Mondays. So if the partner meetings are not possible with your schedule, that's fine. Other team members can present any of the deals that you have. You also have the opportunity on management meetings on Wednesdays to also engage with the partners as well. And you can also reach out to the partners outside of the partners meeting to discuss deals. So it doesn't have to be the partners meeting. That is when the vast majority of deals are discussed. But certainly you can have discussions with us outside of the partners meeting on a deal by deal basis. But ideally, from a time savings perspective, bring it up during a partners meeting, and you can have other team members also present that deal. Otherwise, we can certainly schedule additional time to do that as well if absolutely needed. But ideally, I would join for the 9:30 to 12 to 1 o'clock if possible. You can also be largely listening in, and every team is really presenting for about 20-30 minutes. So you can also just join when your team is presenting, not necessarily when the other teams. So really totally up to you on that side. For those that submitted the application, how long until they hear feedback? So we have a rolling admissions process. So Jenna and the admissions team, we have a Friday meeting where we discuss all of the candidates that were interviewed every week. And then we give basically a quick grade that we discuss internally. And then we give the thumbs up, thumbs down on a weekly basis. So it's a rolling admissions. And then we have our Friday meeting to go over all the candidates that were interviewed. And so usually we'll know within about 1 to 2 weeks, for the most part, of whether or not you've gotten an offer of admission to join Venture University. I like the excitement of the new technology of VC, but the lower failure rate of P. How do I pick VC and P, or can I do both? So right now, Venture University is largely focused on venture capital. However, you will get exposure to all the private equity. Like next week, we're doing a multifamily unit. It's 140 units. It's a 2.3x return in 5 years and a 19-20% IRR. So you're still going to get exposure to that. Those aren't going to be the deals that you're going to be focusing on sourcing and doing due diligence on. Potentially 12, 18 months from now, we may launch that private equity investor accelerator for people that just want to do real estate private equity or just want to do leverage buyouts. But you'll still get exposure to it at Venture University. So you'll still see the private equity deals, and there may be some opportunities of working on some of those deals, but it's certainly not the core focus at this point. We will eventually likely be launching the investor accelerator just for private equity. In that case, it'll be an interesting new model because you can basically then do venture capital for 1 to 4 quarters, but you could also do private equity for real estate for 1 to 4 quarters, or you could do leverage buyouts for 1 to 4 quarters. So it really kind of gives a nice breadth. Ideally, we're kind of growing this into a truly alternative to an MBA, where you could do the program for 2 years. And you can, do 6 months in venture, 6 months in private equity, 6 months in, real estate private equity, and maybe 6 months in, public equities and hedge funds, crypto. So we are developing the program overall where it'll become multiple legs of the stool. Joe asks, for healthcare and biotech deals, where to send the deals, or do I have it? Just send us the email, or you can also submit the deal on VU's website, vuventurepartners.com, and our healthcare team will be sent the deal, and our healthcare team can evaluate it. If I'm accepted for one cohort, say the winter, and something comes up, can I postpone? Yep, you can totally postpone. Once you're accepted, you can postpone to a future cohort. So you totally have flexibility once you get the offer of admissions. You can also, you'll be asked to do a deposit to kind of reserve your spot, and that spot can then be moved to a future cohort. But as long as you pay the deposit, then your spot is locked in. What's the size of your LBO deals? Right now, we're looking at doing leverage buyout deals probably in the ballpark of like $10 million to $25 million will be the size of most of the LBOs that we're doing. That'll probably grow over time, but that's kind of the initial targets are between $10 and $25 million acquisitions. Cool. Any other final questions, thoughts? You guys had some really great questions. The floodgate opened. That was great. leave another minute or two for any other questions that people have. Great. So if you guys have any other questions afterwards, please follow up via email to myself, Arpin, or Jenna, and we can certainly answer those questions. And looking forward to hopefully having some of you in the upcoming cohorts, as well as hopefully co-investing as well based on the questions. So with that, thanks everyone, and looking forward to hopefully having you guys as part of the VU family.